Hey, what's up with you guys? This is everyone here from smartincubator.com and welcome to another video. In today's video, I'm gonna break down so many good trades that happened during New York session in June 8th. And I want to break down some of them for you guys to show you exactly how easy it is to use a smart money concepts trading strategy using the way I show you without any difficult phrases or fancy names or anything like that. Just using one tool, not even an indicator, it's just one tool that I literally identify important zones and I take my trades based on that. And if you don't believe me guys, you just watch this video until the end, go back test it yourself and then come back to this video, drop your comment here and let me know what you think about this strategy. But before that, I want to show you the results of Gold EA Incubator on two different accounts. As you can see, this is the first $3,000 account that we have, and we are up over 150% in profit, and the profit is $1,669, which is Gold EA Incubator. It's just an expert advisor that only trades gold pair during London session on 5-minute time frame. We recently released some new updates that it also trades during New York session and Asia session as well, but this is only based on London session, this account particularly, $1,669, and this is the second $3,000 account that we have, and we are up 57.80% in profit, which is $1,104. And the last trading day was June 8th, and we started this account in April 15th. So the results have been so great so far guys, and everything happened completely hands-off and automated. We didn't get involved manually because there's no emotion, there's nothing. I just sit back, relax, and make my profits. So let me start with GBPUSD first and show you exactly what happened during New York session open yesterday in June 8th. So I'm gonna do a little bit of replay for you because it might be confusing what you're seeing right now. So I'm gonna do a little bit of replay at 8 in the morning and show you exactly what I took. So before New York session opens guys, this beautiful setup literally happened, and we obviously missed it because we don't trade before New York session. So this is a high probability supply zone that we have. The price literally tapped into this level, and then we had a beautiful rejection from sellers, and then this huge bearish candle formed and it broke below these previous structures. So even if you take your sell stop below this level, put your stop loss here, and then your TP somewhere around here, it's just 1 to 1.5. You can also take 1 to 1 if you want to, and then get out of the market super fast. But as I said, it happened before New York session opened, so I just wanted to show you guys that this setup happened before that, using order block strategy. So after that, let's say that we have started the day here 8 in the morning, New York session opened, and then we're just waiting for more opportunities. So right now we don't have any high probability order blocks on 5-minute time frame, and if I zoom out, I can see that the trend of the market is bearish because we are creating so many lower lows and lower highs, as you can see right here, and the trend of the market is definitely bearish. So even if I go to 15-minute time frame, I can see if we have any high probability order blocks or not. And as you can see, yep, we have this one right here from here to here, but it's actually too wide and I don't like it personally, because at the end of the day I want to take my trade based on 5-minute time frame. So I get back to this one. I know the trend of the market is towards downtrend, but it doesn't mean that definitely my trades are going to be towards downside, because order block strategy is just kind of based on bank levels. It could be up and down, but preferably it's better to trade according to a trend, because your trend is your friend, as they say. Sometimes I agree with that, sometimes I don't. Nothing's 100% in trading. So we just wait and wait. See that around 8 in the morning nothing really happens. Right now it's 9:20. So after waiting 1 hour and 20 minutes, nothing formed. And literally right after that, as you can see, this is a high probability order block right here. So see, because this is the last bearish candle, and the candle after that literally shot up. The next candle after that never tapped into this zone. So that's why there's a gap between this zone and this candle right here. So this gap makes this zone a high probability demand zone, and you can also take the last two bearish candles. As always, we always do that, but sometimes it works with the last candle right here and not this one. But I'm going to show you exactly what happened. So what happened was that, if you wait for the price to tap into this level, and if you take the last two bearish candles, you'll see that this is the first candle that literally tapped into this zone, and I personally love this candle, because this is a doji candle exactly at our high probability demand zone. And what I personally do is that I just put my buy stop above this previous level, and I put my stop loss here. But as I mentioned on my previous videos, guys, it's way better to give it some room when it comes to putting your stop loss, because you just want the market to breathe a little bit and not having a super tight stop loss. And most of the times it works, even if you just put your stop loss here and you get a way better risk to reward ratio trade. But it's not really preferred to do such a thing, because at the end of the day, I personally want to go for one-to-one, and if I can take it every single day on a consistent on a regular basis, I'm okay with that. I mean, it's going to be super profitable. So I usually put my stop loss here below this candle right here, because if I want to mention it, if I want to actually draw it here, you see that this is a support level here, and I put it here. You can also put it a little bit further if you want, or tighter. So some people take this zone here based on the last bearish candle, and if we want to do that, you see that it's still not tapped into. So see, we still have something left. So let's say that I put my buy stop here. I want to show you two scenarios that what might happen if you take this trade. And if I put my trade here, you see that it triggers my buy stop here, and then it goes down, and then it goes up, and then it goes down, and it stopped me out right here. But if I put my stop loss here below this candle, it probably still stop me out depending on the spread. I don't know what the spread is like on MT4 and also my broker, but the broker I'm using, it doesn't stop me out right here. See, this is a support level that we have. My stop loss is here. I know for some people it's too wide, but trust me, guys, it's not. If I want to show you, it's 10 pips. 10 pips stop loss is nothing, guys. It's really good actually. And I have to increase my, I need to widen my TP as well. So as you can see, if I want to take it according to the last bearish candle, this is the first candle that triggers my, that actually tap into the zone, and I can put my buy stop right here instead. Or after seeing this candle, I can put it here, and then I put my stop loss below this previous candle, and then I can take my trade. You see that it literally smashed my TP, and it's a profitable trade. You see how it works, guys? Nothing is 100%, but I'm just showing you two different scenarios based on two different zones. But I personally, if it was me, I could have done something that I can just take the last two bearish candles, and then let's say that this is the first candle that tapped into my zone. I put my buy stop here, I put my stop loss below this candle, and then I still can take my one-to-one, guys. You see that I can easily take my one-to-one if I widen my stop loss a little bit, because this is the zone. This is a high probability demand zone. It could be all the way to here, and then it goes up, or it could be all the way to here, and then it goes up. See, it's still valid. So that's what I'm saying. When you have a high probability demand zone, there are so many scenarios that might happen, and you need to consider the entire zone and not just putting your stop loss below the candle. I'm saying it, but sometimes I do it myself. I just put it below the candle because I get greedy. I want to get a higher risk to reward ratio. It happens to every single trader. But what I'm trying to say is that even if you can take your one-to-one, how many pips it is? Is it almost 11 pips? So if you can take 11 pips to 15 pips every single day, guys, I can guarantee you'll become a profitable trader, no doubt. You can go back to it and then come back to me and let me know what your opinion is. So this is for GBPUSD, guys. I hope that you got some value from this one, because it's super important. If you're using this strategy, pay attention to your stop loss, please. And if you have a wide zone like this, if you have a really narrow zone, then just put your stop loss below the zone, and if you get stopped out, nothing happened, it's just part of the game and you didn't do anything wrong. So let's go to NAS 100 to see if we have any setup. As you can see, yes, we do at 9:30 in the morning. This is exactly when New York stock market exchange opens, and you got to be careful when you are trading NAS 100 around that time. So I'm not going to go to 8 in the morning because nothing really happened. All the high probability order blocks happen right here. So if I delete everything, you see that let me show you. Look at this. this is such a wide zone, guys. You got to be careful with that. It's kind of risky if you want to trade such a zone because it's too wide. There's so many things that could happen in the middle of the zone, stop you out, and then it goes up, or it just never goes up and disrespects the zone and break below the zone. So many things can happen. But if I actually consider the last bearish candle, which is this one, and it covered the entire candle, you see this is the first candle that got out of the zone, and the next candle after that literally filled in the gap super fast. So this is a little bit more advanced. You know, I always talk about it on my videos that, you know, you take your you identify your high probability supply or demand zone, you see the next candle that forms after that, and the next candle after that, there should be a gap in between. But in this case, it filled in the gap super fast. And you got to be super accurate and also quick as well, because you need to put your buy stop above the previous candle and put your stop loss here and your TP right here. Again, this is a little bit risky because you don't really know where you're putting your TP because there's nothing here. If you want to consider the closest resistance level, it's going to be this one right here, or this one right here, which doesn't count anymore because it already grabbed the liquidity. But this is the next resistance level that we have right here. So if I go further, you see that we also have we don't have any yeah, actually we do have a high probability supply zone here. So let me just delete this one. See guys, this is the last bullish candle, and if I want to cover the entire candle all the way to here, you see that it's still a high probability demand zone. So that's a good one. I can take my trade all the way to here. So it's going to be a little bit, you know, above this level. Again, it could be a little bit risky, but this is exactly what happened after that. With one candle, it has smashed my TP and literally tapped into the next high probability demand zone. So this is nothing because it was a liquidity grab. We had a bunch of stop losses above this level that all of them got grabbed. They got liquidated, and then this is the high probability supply zone that I just identified. It was a little bit far, I know that, but this is exactly what happened. So you could easily take a one-to-one trade with NAS 100 during opening. As you can see, it smashed my TP. So let me see if it respected this zone. As you can see, it actually did. So if I want to show you exactly where the zone is, it's right here. See? It's right here. You can take your one-to-one here, and then you come here, you see this candle, which is beautiful, this candle right here. So you know that it's probably respecting the high probability supply zone. And if you want to, you can take your sell position here, you can also put it above the zone, and then you come down further. You see that you can take a one-to-one trade. But you also should pay attention to this high probability demand zone here. So it's way better to get out of the position here, but the risk reward ratio is going to be less. So it's still a little bit risky, because what if the price literally tapped into the zone and just, you know, got to get reversed? So that's what I'm saying. So if you put your stop loss here above the previous candle, then you have a proper risk to reward ratio trade. See guys, how easy it is, that you just need to identify the zones and then trade based on that. This is how you can identify every situation and then trade according to that. So I want to show you quickly what happened during EURUSD during New York session as well. So I'm not going to do a replay because it's been already almost 15 minutes, and then you know how the strategy works. So let me go to EURUSD around in New York session, actually at 9:35. This is the high probability demand zone that formed here, and this is the first candle that literally tapped into this level. You put your buy stop here, your stop loss below the previous candle, not here because it's too far, and then you can literally take your, like, it's a it could be a very risky trade, because if you put your stop loss here, then you had to put your TP right here, and it never hits your TP, and it comes back to stop you out. Because as you can see guys, we don't have any high probability supply zone here. We do have this high probability supply zone here actually that I identified, and let me show you. This one got disrespected because it got out of this zone, so I'm going to delete this, and then I'm going to identify the next resistance level, which is this one right here. So this is a liquidity grab. See, you could have taken your trade here, but as you can see, it never tapped into this level, and it just boom reversed stopped everybody out. So that's what I'm saying. Sometimes it's really recommended to just put it below the previous candle, and then you can take your 1-to-1 here, or you know, you just stop out, go for the next trade. And this is exactly what happened on GBPJPY, which was really cool. So I have an example here. See, this is exactly what happened at 9 in the morning. We have a high probability demand zone. We have this candle that tapped into this level. We have this almost bullish engulfing candle. So let's say that my buy stop gets triggered here. My stop loss is here, my 1-to-1 is here, and then I get stopped out. Why? Because I'm so close to the nearest resistance level, which is this one. And if I want to enter my trade here, I have to put my TP right here, but look at the risk reward ratio. It's even less than 1-to-1. That's why I'm saying it's not recommended to you know, trade such a thing. And if you want to do that, just look left, go a little bit further, see if you have any high probability supply zone or any resistance level that is potential to get stopped out. And then you can actually trade according to that, but there's actually nothing here, because look at the trend. It's super bullish right here, and it's actually overbought. So I'm not going to trade this one, guys, especially in GBPJPY, which is really inconsistent for me during the New York session, and I easily get stopped out because it's the nearest one, and then it came all the way to here and then got back to here. But what happened was this one right here. See, this is a high probability supply zone, because there's a gap between this candle and this zone right here, and this is the first candle that tapped into the zone, but this candle literally confirmed everything and is still respecting the zone, because if you pay attention, this week didn't get out of the zone and it's still respecting it. So this is a beautiful doji candle that I personally love, and what I personally do is that I put my sell stop below this candle and I put my stop loss above this zone, and then I take my 1-to-1 all the way to here. See how beautiful this trade is? And after seeing this huge drop from here to here, see this huge drop, then I can actually give it more chance that it's going to be a good trade. But it's 1 p.m. it's too late for me. I personally don't trade it, but I'm just showing you guys that this setup happened based on this huge drop that we had. See, break of a structure, and we have a high probability demand zone here, and then if you want to take your buy stop here, then you get stopped out again, and it disrespects this zone as well, so this is invalid. So GBPJPY is a little bit weird, I know, all the time, but you just need to pay very close attention to know exactly what the trend is like, and then you just trade according to that. So it's been super long, guys. It's been almost 18 minutes, but thank you so much for watching this video. If you got some value from this video, give me a thumbs up, subscribe to my channel, and turn on the notification bell, so next time when I upload a video, you'll get notified super fast. And if you have any question regarding Gold EA Incubator, about automating your trading process, about trading hands off, feel free to ask us your questions by visiting our website, which is smarteaincubator.com, and then you can contact our support team. We'll get back to you as soon as possible. Thanks for watching this video again, and see you on the other side.